Hey everybody, Brian here from quantlabs.net. Let's talk about Dukascopy and forex trading in general. But since I'm trying to go with Dukascopy out of Switzerland, um, that's my focus. So, what sparked this uh, podcast was a comment that came in this morning that I wanted to get others' opinion on. Um, this was for a video I put out in end of August entitled "Latest Dukascopy J Forex Java and Python Algo Forex Trading Script." Now, this is the comment that came in. Very much doubt that Dukascopy stop hunting. They are a Swiss regulated ECN, so it's surely extremely unlikely that they run a secret B book. That's an interesting term that you could call it. Overall, a lot of people are moving into cryptocurrency is because of just this. Forex trading or forex brokers are so corrupt, and a good majority of them. So I think a lot of people have lost faith in the crypto and moving into, or lost faith in the forex and moving into crypto. With the automated, there's a lot more profit in there with the volatility. If it moves in your way, it can definitely work in your favor. Continuing with the comment, if you trade fast charts, your stops will execute with much less slippage. Yeah, I would agree with that. From the calculations that I'm seeing in my reports and the strategy, the slippage is very minimal. Now, again, that's not with live money, but just in a demo mode. So that's what I'm learning from there. So let me just, your stops will execute with much less slippage if you place them on their server. Virtual stops will most likely cost you and for no real benefit. Yes and no. I could probably, I don't want to say argue it, but if you're using different types of market orders, I guess that might still work in your favor because you're not running it through an order book, and you should be able to get top of book selection for your execution. So that's what I'm hoping will take place. Logically, that would make sense. So continuing on this video, I thought I would just update people on where I'm at with this stuff because this is very topical on what I'm working on right now. So what do you mean Java is better than Python? Um, for not letting the broker know your stop loss and keep it only on your side. Also, does your course provide, okay, let's not talk about that. Okay, so the Java is what's used in the in Dukascopy J Forex. I am using Redis NoSQL as my backend to maintain certain state of orders. The big one is the number of bars that are tracked once a position is put on. That's what I'm tracking. Now I could do that through arrays, but it just gets so hairy and just really screws up the strategy and the actual jar file when it's running within JForex. So I've taken a lot of that IO, um, IO processing and put it and embed it right in the database because it's just a simple lookup on a database. So that seems to be working pretty good, and it's pretty fast as well. But I'll probably talk about that down the road. It's probably the most effective way that I've seen. I mean, you could use other databases, and really performance I don't think would make much difference. But when you start working at higher volume, your database will be an important choice, and that's where I think Redis really um, shines. Because the other thing is that you can use Redis your message queuing as well, with all the usual redundancy and replication that I've talked about. If you're really interested, just go into my YouTube channel, Quant Labs, and look for the playlist of Redis. I've got a lot of videos on that. So the question is, why don't I use 0QMQ to integrate JForex with Python? I was in another discussion regarding Nano MQ, which is a replacement for 0MQ, which is message queuing. The reason I don't use either of these, as I said earlier, is I'm looking for replication redundancy out of the box. So then I can build out clusters and replication on data hubs as I grow the system. and it's probably the smart way to do it the right way once, instead of having to pretty well rewrite your plumbing down the line as you start to realize that, yeah, you need to rewrite, and I really don't want to have to go through that. And the thing I like about Redis NoSQL is that it can work with a lot of languages, and the upcoming language I'm looking at will be Swift as a front end using SideChart for my iOS devices or Mac OS device, or not device, my Mac, because SideChart's going to be releasing possibly releasing a version of their amazing charting for Mac OS. So that's going to be a really big deal. So I'm kind of excited for that, and that's probably my front end eventually. I've been playing around a lot with the J4X, which is quite good, but I'm just using it more for charting. Let me just see, one last question. Is there a way to call Java into Python easily? Everything like RPC does it exist in the Java world? By the way, I also read their website. They have a fix for some account that meet the criteria. Now, again, if you're using, I've tried to using all these different bridging technologies. Having, in my case, I was looking at having a Java script rendering front end embedded into a C++. I really don't think that's a wise move. I've also looked at things like RCPP, and that's all fine and good, but you will, I think, run into problems of CPU. So that's why I like just using Redis, as I said before, with the replication redundancy. The clustering is getting really good, and not only that, but with the Redis 4, the modules make another game-changing difference with that database. So hopefully that will help you out in all this regarding Dukascopy as well and their stop hunting business. So I can confirm, I'm hoping, if I can translate the experience of the demo mode into live, that yes, you don't really need to worry too much about slippage. It seems to be fairly low, and also the transaction fees they're just fairly minimal. So unless you're trading on very low profit off of each trade, and you're just scalping, yeah, you're not going to do well. I think the timing is important when it comes to Dukascopy or any forex trading. And what I'm seeing is the longer you hold on the trade, meaning hours opposed to minutes, you probably make likely a more profit, and the profit's much higher than just making fast trades, holding on for a couple minutes or whatnot. That's what I'm experiencing, and I think that's going to be the next big step is to time that. And I've tested it enough to kind of see here with confidence that seems to be the case. If you are picking a forex currency pair that is on an upward momentum, you want to hang on to that as long as you can. So that's what I'm working on now, on getting out. And from what I'm seeing from many other people, the methodology is pretty well universal. There's some small modifications to it, but it's quite interesting that it seems to be the core of it is universal. Hopefully I'll help you out. Talk to you later.